Hi everyone. I want to thank you for joining us today. My name is Chris Herndon. I'm the Sales Director in New York for OptionsCity Software. I'd like to welcome everyone to today's presentation. Joining me is Charles Reyl. He's the co-founder and president of Parity Energy. And today we're going to learn how to trade on the Parity Energy Platform using OptionsCity Metro to capitalize on opportunities in the OTC energy market. We'll cover the growing trend of OTC order flow transitioning from voice to electronic due to financial regulatory trends. And we'll also show you how to leverage OptionsCity to capitalize on arbitrage opportunities in the energy marketplace. Now, before I turn things over to Charles, I'd like to invite everyone to attend one of our happy hours, depending on your location, either here in New York, tomorrow at the Grill Room at the World Financial Center, or in Chicago next Thursday at Vogue Mahone. So come learn more in person about the integration between Parity and OptionsCity. Okay, now I'll turn things over to Charles to introduce the Parity Energy Platform.
Hey, thank you, Chris. Hi, my name is Charles Reyl, and I'm the CEO of Parity Energy. Thank you very much for joining us today for this webinar. Parity Energy is in the business of matching institutional buyers and sellers of energy derivatives, both over the counter and on exchange. Parity Energy owns and operates the Parity Energy Platform, or PEP, an internet-based global electronic trading facility for energy options, whose volume has been doubling year over year, handling over 8,000 trade executions and 600,000 contracts since inception in 2008. As of today, PEP counts approximately 150 trading institutions as participants. Customers include crude oil and natural gas producers, oil refiners, utilities, investment, commercial banks, hedge funds, essential locals, and market makers. PEP operates currently as an exempt commercial market and is uniquely positioned to meet the upcoming regulatory requirements for swap execution facility status, and we'll learn more on that later. So why use PEP? So Parity Energy, we designed PEP with the institutional OTC option trader in mind. For instance, we've made it easy for traders to place orders and request for quotes on strategies such as straddles, corporate options, or strips. We've also incorporated live broker support to provide color and information to PEP traders. And then we've also created a very simple and intuitive interface to help traders focus on relevant information. All orders on PEP are firm and anonymous, and all trades are systematically cleared via CME Clearport or ICE Clear. PEP allows for automated quote feeds, including the ability to submit many quotes simultaneously through a fixed API, Excel add-ins, or certified vendors such as OptionsCity. So we're very pleased to partner with OptionsCity to provide our customers with electronic access to the OTC options markets. And I'll pass it over to you, Chris.
Okay, thanks, Charles. So a little overview here on OptionsCity. We're headquartered out in Chicago. We just actually opened up recently a New York office. We are a multi-asset class platform for professional traders. And we consider ourselves an end-to-end options trading solution, meaning do everything from modeling, pricing, execution, quoting. We have electronic eye, auto hedge capabilities, as well as integrated risk management. So it's really multiple systems in one. In addition, we have tablet technology, and we're pleased to add PEP to our list of exchanges that we are connected to. Okay, so why use OptionsCity Metro? Metro is configurable to closely match traders' needs, and because of the server-based architecture, Metro gives users the power and speed to successfully compete in today's electronic marketplace. Metro has a powerful quoting engine, and this is one of our differentiating features. Another is our electronic eye, giving the traders the ability to leverage their skills, scan for opportunities in the marketplace, and automatically execute as well as automatically hedge. Okay, so turn it back to Charles to talk about the trends in the OTC energy market.
Thanks, Chris. So it's useful to take a look at the status of OTC trading. What's interesting to see is that electronic trading is gaining ground. What you're looking at here is a chart that shows the relative growth of option trading volumes in the energy and precious metals complex. And you can see four different trading avenues, namely OpenAPI, NYMEX, which is essentially voice trading, Clearport, so that's all the trading taking place, typically mediated by interdealer brokers. Then you see the Parity Energy Platform, which is electronic in essence, and Globex. So that this is not exhaustive, but gives you an idea of the type of trading that's taking place. Now you can see the relative growth. So these are the average daily volumes starting as of the last quarter of 2009, all normalized at 1. And clearly the two trading avenues that have grown the fastest over the last 6 quarters have been electronic trading avenues. What this chart does tell us, however, is that 87% of all option volume traded by voice in 2010. So in other words, the option markets in the energy and precious metal space is still very much dominated by voice. So transition from voice to electronic is expected to accelerate due to the upcoming financial regulatory reform, as we will see on the next slide. So just a quick detour on Dodd-Frank. So why Dodd-Frank matters. The Dodd-Frank Act will deeply affect over-the-counter trading by establishing requirements on the trading of so-called swaps that are expected to include most popular energy option contracts. So those requirements consist primarily in mandatory execution on regulated marketplaces, mandatory clearing, and mandatory reporting. So some transactions will be partially exempt from these requirements, but the bulk of the option trading volume is definitely expected to move towards swap execution facilities, which are currently slated to include an electronic order book with the following attributes: multiple-to-multiple trading, equal and impartial access, firm orders, pre- and post-trade transparency. And you will see that the Parity Energy Platform meets or exceeds the market structure requirements for swap execution facilities. So the main takeaway from this slide is that you should get ready for the OTC order flow to transition from voice to electronic over the next couple of years due to the financial regulatory reform. Over to you, Chris.
Okay, so
oops, sorry, you're right. Okay, one more slide. So I wanted to also introduce to you guys the main option contracts that are being traded OTC in here specifically in WTI crude oil and Henry Hub natural gas. So the first category that we're looking at are monthly options that consist of American exercise stop and European exercise stop options with monthly maturities. And so those are the most popular, and they're being traded by a lot of end users, banks, hedge funds, and producers, for instance. Because they're the most liquid, they're also the easiest way to gain and mitigate volatility exposure. Now, in the last column, you can see the ADV, so the average daily volume. Note that the average daily volume here is estimated and only includes OTC cleared transactions. So specifically does not include OpenAPI or, say, Globex transactions. So out of that number of 200,000 contracts a day, the lion's share is actually in natural gas, European stock options. And another type of contract that's traded OTC is the calendar spread option. So namely, an option on the spread between two futures contracts. And so, people who do that, typically storage owners or index funds with banks. That's a way to, those options, CSOs essentially a better way to monetize the storage capability and also to hedge like monthly futures role in the approximate ADVs of like 15,000 a day. Again, that's numbers in contracts. APOs, which are currently available on PEP and will be coming to OptionsCity soon. Our average price options, which are favored by producers and consumers in oil, and people use that for hedging and early production. Average volumes over like 12,000 a day. And finally, we have daily options like same days or next days. Those are options that you enter into and send in and expire, and they are providing perfect stop order. They also allow people to get exposure or